Ladies and gentlemen, you caught us chatting on the stage. I'm chatting with our next presenter for this session, our third session today. Do you know what? When I come in here after lunch, I always feel really guilty because there's so much nice food out there, and I was just contemplating, would it be rude of me to bring a plate in here and sit up the front and eat some more cake? What do you think? Yeah. Someone asked me at the back, could they come? They had a big plate, and I said, come on, we're about to start. And he said, can I eat in there? I said, you can eat in there if you like to, that's fine. So you can come and you can bring your food in here and eat. For those of you at home who are playing along with us at home and watching the presentations, food here is bloody good. If you have a chance, you should actually come down to the presentations in real life if you can. Right, you've got your glue. Someone's got his jelly beans down here, just in case he runs out of energy in the front row. Is that right? Absolutely. Okay, we don't want that happening. We've got a lot of energy-rich companies here presenting today. And our first one is Mr. Rob Bills. Rob is from Emmerson Resources Ltd. Emmerson is actually leading the way utilising cutting-edge technology across the Tennant Creek mineral field in the Northern Territory, also New South Wales, Macquarie Arc, to identify gold and that all-important copper deposits, with some really exciting discoveries identified in late 2021. They've got a really exciting pipeline of activity for us in 2022. Would you please make Rob very welcome?
Well, thanks very much, and thanks, Chrissy, for that introduction, and also to the audience for allowing me to give you a bit of an update on Emmerson. Just disclaimer, this presentation has been released on our website, so you're more than welcome to have a look at it there. So what are the value drivers in the junior sector? It's probably four key things. Ground position. We've got projects in Tennant Creek, the Northern Territory, and New South Wales. It's around commodities and the commodity mix. We've got copper gold, where obviously copper gold in Tennant Creek and in New South Wales, and also cobalt in Tennant Creek. And then really it comes down to discoveries and your track record. To date, the thing that's really driven us of recent times is our cracker intersection at our Hermitage project, 116 metres at 3.4% copper and 0.88 grams per tonne gold. Now that intersection we drilled last year, towards the latter part of last year, and that was ranked as one of the 16th best copper intersections in the world of 2021. We've just got a program now as we speak following that up. Then it comes down to what are the distinguishing features? I mean, I think there's something like, 110 odd companies out there, and 630 odd listed on the ASX. So why would you buy Emmerson in front of those? And I think we have got a few very a few features that do distinguish us quite clearly from most of the other junior sectors. And I draw your attention to the gold royalty there. Emmerson receives a low risk 6% gold production royalty, and that I think is a big plus, which I'll talk a little bit about later on. So I want to just now talk to the first part, the discoveries. Obviously, that's the biggest value driver in this sector. The biggest, you get potentially the biggest uplift in your share price, and this was the announcement we made last year, 116 metres at 3.4% copper at our Hermitage project. So it's a 100% owned Emmerson area. It's associated with a magnetic anomaly, and you can see there the sort of copper that we got from the RC drilling. So we've got, we went through a zone of malachite, secondary copper, then we went into 30 metres of native copper at the base of oxidation, and then we went into primary chalcopyrite. So the hole ended in some of the highest grade copper and gold. Ended there because the drill rig couldn't drill any further. We ran out of rods. So that's pretty exciting, and we're following up as we speak. So the pink dots are the collar positions of the holes that currently got underway. So that's a pretty exciting program. When you look at that in long section, we've drilled into this what we call a breccia pipe for the non-technical. It's really the zone of fluid upflow with the mineralisation coming up that pipe. We don't know the dimensions of that pipe at all. So that's why this phase 2 drilling program we've got underway will pin down the margins of that pipe and hopefully lots more of the copper and gold that we saw in the previous drill holes. A little bit about our capital structure. Obviously, you need cash to make discoveries. So we've just done a very successful oversubscribed placement. So we've now got $10 million in the bank. We've got an SPP out there as well. Potentially get in another 1.5. We're very well placed cash-wise, but also keep in mind that the gold royalties will start flowing next year once the mill's established in Tennant Creek. So that 6% gold production royalty is aimed at self-funding our future exploration. A little bit about who's who in the zoo in Emmerson. Basically, very stable board. Most of the board have been on this journey with Emmerson since 2007. So very stable board, been there for quite a while. Our ground position, it's all around, you know, the best ground in the best, one of the best provinces. So that's our ground position, surrounded by Rio Tinto. We've got a plethora of other companies out here to the east, Newcrest, BHP. So very strong ground position. And if we zoom in on our tenements, we've got 1,700 square kilometres there, and the blue and the pink are joint venture tenements. So that's our joint venture partners, Tennant Consolidated Mining, TCMG, and they're funding us to do the exploration. So that's a $10.5 million spend by them over 5 years to earn 75%. So that's we don't have to put a hand in our pocket. We're the managers and operators during the exploration phase, and then the idea is the discoveries are then turned into a mining joint venture. The mining joint venture is where they manage and operate and do the mining and processing. We get a 6% gold production royalty from that mining. The mill, TCMG mill, that's going in later this year in Tennant Creek. So these are all stranded assets as we speak today. So I think you'll see a big value uplift once that mill comes into the district. There's no mill in the district at all in Tennant Creek. So once that mill gets to Tennant Creek, obviously those stranded assets now will be able to monetize them. So I think you'll see certainly a big uplift in our value. In the mining joint venture, we've already announced a number of deposits, so you can start valuing that 6% gold production royalty, and more of these will come as we go forward in the exploration. As we make discoveries, they flip into the mining joint venture. The JORC resource, all that sort of thing is calculated, mining plans, all that sort of stuff is done by a joint venture partner. We don't have to pay for that. This is one of the first ones that was done. So this is on the Chariot resource, talking about 139,000 ounces, both a high-grade open pit and then an underground operation. So you can start calculating what a 6% gold production royalty would look like for Emmerson from some of these JORC resource estimates. Another Emmerson discovery, Mauritania deposit, got a very high-grade open pit, and the pink is we've been flying drone geophysics, and the pink is the inversion model of the drone. So we think that there's good potential, like Chariot, for this mineralisation, the open pit mineralisation, to continue at depth. So whilst this is a modest high-grade open pit, we do believe there's great potential for extending that underground in that pink area. And in fact, we've got a drill hole there that we drilled 12 months or so ago, about 4 meters at 57 grams. So, you know, great potential, I think, for high-grade gold at depth. Just turning to a bit of the technology stuff and the track record in discovery, you know, as I said before, discoveries are the biggest value driver in this sector, and we've made a number of them, and I think we're going to make a lot more. This has been a game changer for us. So previously, the map over here is from fixed wing aeromagnetics, flying 50 meters above the ground on 50-meter space line, and you can't see, this is our Mauritania discovery, you actually can't see that in the fixed wing data. When you fly the drone over it, lights up perfectly. So it's really going to be a game changer. So there's a lot of subtle magnetic anomalies in this field that have never seen a drill bit. So I think from moving forward, and this Mauritania discovery, the Edna Beryl discovery, the Hermitage discovery, these are all of these iron oxide copper gold deposits, which are mainly hematite dominant. They're weakly magnetic and very, very, very few drill holes. So we've flown about 10,000 kilometers of drone magnetics in the south, and I've just signed the contract for another 10,000 line kilometers in the north. Quickly turning to our other projects, as I said, Expiration Hotspot, 2 of them. This is the second one. Obviously, you've probably heard of the the Cadia Ridgeway deposits here, Boda up here. So we're in the same belt. Our most advanced project's down here at Cahill. It hasn't seen a lot of drilling and exploration, certainly not before Emmerson's time. So we've put together a very systematic science-based program there, which we can see here. We've done a geophysical study and pulled it into a 3D model, which you can see here. So we've got a central intrusive. It's a porphyry copper gold system. So we've got a central intrusive mantled by this chargeable conductive zone, and you can see that in 3D. So we've got a very exciting drill program happening there next year, looking for the next Cadia Ridgeway or Boda style deposit. You can see the terrain here. It's basically farmlands, very little outcrop, but what you do see at the surface is a fair bit of copper. So you'd have to, if you're a betting man, you'd have to say that some of these chargeability anomalies are in fact sulfides, and potentially copper sulfides, hopefully, but only drilling will tell. So just turning now to the upcoming activities. It's a very aggressive drill program moving forward. Drilling at Hermitage, as I said, that's underway. We've got native title clearance continuing at a nearby project called Jasper Hills. Again, another 100% Emmerson project, which is a copper, gold, cobalt, high-grade copper, gold, cobalt project. We've also got drilling in the joint venture area, the Golden 40 area, which we hope to convert into a JORC resource. So you'll be able to calculate your 6% gold production royalty from that. Drilling over in New South at Cahill, as I said, drone geophysics continuing on, and obviously generating new targets from that drone as we go forward, and further work in New South. So just summing up, really these assets have been unloved and stranded. So the JV with our joint venture partner TCMG, when the mill comes later this year, obviously that'll unlock the value in those projects, unlock our 6% gold production royalty. We continue to drive a very aggressive district-wide exploration and discovery phase. There's multiple programs happening this year, one underway as we speak. New mineral resource estimates. We've obviously released the Chariot one, the Mauritania one. Hopefully all goes well with our drill program at Golden 40. You'll see another one for Golden 40. So there's a pipeline of JORC resources coming through, which you'll be able to see that our emerging gold royalty business, the 6% gold production royalty, which will fund future exploration. We're also, unlocking new ground. We've got a great partnership with the traditional owners in Tennant Creek. We've been there for over 12 years, and we've developed some very good partnerships there. a lot of those areas have got buffer zones around sacred sites, which we're able to unlock and work on. So Jasper Hills is an example. So if we can unlock that one, again, another great project. So all in all, look, a very, very strong pipeline of projects. As I said, the biggest uplift in share price is Discovery, as we saw from our initial intersection at Hermitage. And I think there's going to be plenty more of those going forward in this year. And then we've got the distinguishing features around the gold royalties and also bringing the mill on site in Tennant Creek later this year. So with that in mind, thank you very much for listening, and we're at booth 58 if you want to continue on with some more information about Emmerson. Thank you very much.
Thanks, Rob. You certainly look happy out in the field in that picture there. Who's doing all your naming of your sites? Is there anyone in particular names your sites?
Most of them were historic.
Ah, they're historic. I was wondering whether Black Angel, White Egg Devil, Golden 40. Interesting, isn't it, watching that drone use? I've got a mate of mine, and I'm 52, and when we were at high school, drones weren't even really thought of. His job now is as Gina Reinhardt's official drone operator. So when Gina wants something looked at on one of her properties or her mine sites, he gets a phone call and he has to get the drones out and remotely operate them and get them to go and see whatever it is that Gina would like to see at that point. But not a job we would have even thought existed all those years ago, now so integral and unlocking so much potential. Gateway Mining, would you like to join us, please, sir, up on the stage? Gateway is a West Australian-focused mineral exploration company. They are systematically building the gold resource at its Gidgee project, gold project in the Murchison district of WA. Mark Cossom is this fellow. He's been the director since October 2019. He's been managing director since 2021. In February, he assures me there was no hostile takeover involved at all. It was a smooth transition. He's got 25 years of experience with a background in gold exploration, mining geology, and also corporate management. Please make him very welcome to talk about Gateway Mining.
Thanks, Christy, and thanks to RIU and the sponsors for putting this great event on. It's good to be over here, and thanks everyone for coming in and tuning in online to listen to the Gateway story. Disclaimer there, which can be seen on our website. I suppose a bit about myself, you know, coming to my last job and what attracted me to Gateway. There were three things that I thought about the company which really stood out, and that was, first of all, the projects, the Gidgee Gold project, which is Gateway's sole focus, 1,000 kilometre squared area in the Murchison region of WA. Great project, great geology. The team behind the company, you know, there's some really strong people involved and with a track record of doing things and building companies, and also the shareholders behind the company, particularly the top 20 shareholders, you know, really supportive, all bought into the strategy, and that really helps us keep pushing this company forward and making it into what it is and hopefully what it'll be in the future. So as I mentioned before, Gateway now sort of is focused solely on the one project. The company was sort of reset, if you like, in 2018, and since then we're all about the Gidgee Gold project in WA. 1,000 kilometres square. Since the company took on that undertaking in 2018, they put out initial resource in 2019 of a couple 100,000 ounces under two old pits. There were 5 pits mined by Herald Resources in the late 80s and early 90s on our ground. Put some resources there, and since then we've been doing a lot of work not only on those existing resources. We've made some new discoveries. December last year, we updated our resource inventory. We now got just shy of 450,000 ounces, and importantly, we've converted some of those into the indicated category as well. And we've really identified now the next phase of targets around those resources to keep building that resource inventory and keep growing it, ultimately to a point where we can look at the commercialisation of the project and taking it forward. Right now, we're smack in the middle of a 60,000 metre drill program. We've completed about 23,000 metres since late February. Unfortunately, we're still, as a lot of people are, waiting on the assay results to come back from our laboratory, but that news flow is coming, and we've got the cash to carry out what we need to do and to keep pushing the project forward. Quick corporate summary. See there, market capitalisation about $29 million, which is relatively cheap for 450,000 ounces. as I mentioned before, about $5 million in cash there. But the other thing we've done too is in the process of focusing the company on Gidgee only, we divested a lot of other projects and ended up with a nice little share portfolio of some other listed juniors. A few of them, Discovex in particular, 20% of the Carnaby project, Carnaby's project up in Queensland had gone for a nice run, and Strickland Metals as well, who have done really nicely out in WA also. So that portfolio is now worth about just over $2 million. So that's a nice little buffer to have in our back pocket also. You can see on that slide there, our major shareholder, Kerry Hermanis, come in with when Pete Langworthy, previous MD, reset the company in 2018. Pete's also there as our second biggest shareholder also. So strong support, guys involved behind the company who have been pretty successful in their other undertakings. The board structure, we've got a good spread of skills on the board. Myself, I'm a geologist. Trent, our chairman, is Sydney based over here and background in corporate finance. Deb Fullerton is also the CEO of Westgold, one of our bigger neighbours, and Scott Brown over in Perth, running a geological consultancy over there. So really good spread of skills on the board. I mentioned before, Pete still involved with the company as our key consultant. So where we are, we're in the Murchison region of WA, about 700 kilometres north of Perth. Historically producing goldfield on the Gum Creek Greenstone Belt. As I mentioned before, on our ground there were 5 little pits mined in the between 88 and 93. But importantly also where we are, we're smack bang in the middle of Westgold and Ramelius out to the west of us. To the east of us, we've got Wiluna and Goldfields, and then the guys at Bellevue are constructing a new plant there. So on top of that, we have road infrastructure running straight through the middle of our project, right next to our existing resources. There's bitumenised highways in the area. It's a well-known and historically operating goldfield part of WA. So it's a great place to be. And in terms of places, in terms of exploration for gold worldwide, repeatedly WA keeps coming up at the top of the list for where you want to be, both from a prospectivity point of view, but also jurisdictional risk, and also the ability to develop projects and get them operational. So I mentioned before, we December last year upgraded our resource inventory. There's an 87% increase on the previous one, and that was on the back of some extensions to one of our older resources at Montague, but also 2 new resources, 2 new discoveries which we brought into the mix. And these importantly, over 70% of our resources are in the top 100 metres. So these are shallow resources. We're not talking about deep things on the edges of old historic mining operations. These are generally new, shallow zones of mineralisation. A lot of it's in the oxide zone, easily exploitable by open pit style mining. And there's more to come. But at Montague, our biggest resource, 163,000 ounces. We did a lot of work on this, understanding this deposit between 2020, 2021, managed to extend it along strike. Also found a lot of gold hosted in the granite, which is that pink rock on those cross sections, which previously hadn't been identified. There's still scope to add a lot more in that region too, because we still got to keep following up this granitic hosted mineralisation also. But one of the other things too with Montague, we started to nail down some of these high grade areas, and we can see there it's now got a high grade 67,000 ounces at 4 grams per tonne indicated resource. So showing that with the increased data and confidence, these high grade zones are also present and hang together nicely. Evermore, this was a new discovery we made on the back of that increased understanding at Montague. That little oblique photo there, you can see that it's directly along strike of the old Montague pit, under an area that was covered by historic RAB drilling from the mid-80s. We went back and after getting our head around Montague, what was going on, we decided that a lot of that drilling was ineffective, and went back through with an RC rig, and lo and behold, we were able to trace that mineralisation to the north and be able to define what's now the Evermore deposit. And that deposit's still open. So in December last year, we put out a release for a hole north of Evermore there, that 21 metres at 1.7. And that's around the very edge of this granite spoke about before, as it starts to turn around towards one of our existing resources there in Whistler. So this is an exciting area for us, trying to work towards joining all these things up around the margin of this granite. There's a lot of upside there, and we're going to be moving on to this area next to keep building those resources. Achilles, another one of our new resources. Again, this was straightforward exploration in an area that had previously been subjected to historic drilling, which wasn't effective. We went back, just drilling north along strike of that little rosy pit labelled there in the diagram. You can see from some of those intersections, this basically starts from surface, about 3-5 metres below surface. Again, oxide mineralisation, really shallow, really simple geology. Going forward, hopefully exploiting this will be fairly straightforward by open pit methods. But now the work we're doing at present, and we're currently drilling at the moment on site, looking at 3 other areas. Importantly, one of the things we're doing, even though it's a big tenement area and there's a lot of land up there to move, we're staying focused at the moment within this 5 kilometres of our existing resources. And that's important as we find these new discoveries and add them to the resource inventory. We want them to be complementary. We want them to work together to help us commercialise this whole project going forward. So Julia's over to the northwest, Kashmir down the bottom there, and Monarch. This is where we've currently been drilling and where all our results are awaited. So Julia's, this is again another shallow oxide discovery. So initial holes put in there by Gateway back in 2008. We went back to it last year and started having a look and really put a few RC holes in that area in the box on that diagram with about 500 metres of strike. Started to get some solid oxide zone mineralisation, good grade, and really nice and continuous. We then continued to chase that down to the southwest with the air core rig. We were tracing mineralisation all the way down towards that historic flame tree target there at the bottom of that diagram. We've just been out there with the air core rig, continuing to drill further down towards flame tree and also off to the northeast of that red boxed area. It's really open along strike there. So, we've got a couple of kilometres of strike there to potentially extend that mineralisation. In the meantime, we've been doing RC drilling at Julia's to get a proper grid pattern over that deposit, and that'll be our next target for adding to the resource. Kashmir, this is down to the south end of our tenements, right up hard against our tenement boundary, that orange line there going through that diagram. So Kashmir, this is directly along strike of the Howards deposit, which is owned by our neighbours, Horizon Gold. That's 200,000 ounces, still sitting in the ground. We just can trace that structure north onto our ground. Last year, we put 3 fences of RC drilling there from the bottom of the tenement and found the same style of mineralisation, the same sort of tenor of grade as what's at Howards. There's some of Horizon's intercepts from Howards. So we've just had the RC rig out there now and kept drilling for that further, 1 kilometre further north that we can see that structure continues up into our tenure. So those results, again, are still outstanding. Monarch, this is one that I'm particularly excited about. This is out slightly to the east of Kashmir, but still, we're still within this 5 kilometre radius of our existing resources. There's a heap of old workings out there from the 1930s, but for some reason or other, and I haven't been able to track it down, there's been no modern exploration done out there at Monarch. So we went out, did some soil sampling, delineated about a 6 kilometre long soil anomaly. You can see from that diagram, the guys, when they were out there, they took some rock chip samples, outcropping mineralisation up to 19 grams per tonne at surface with no modern exploration applied to it. So we're going back there now. That's literally where the RC rig is now, putting a series of RC holes across this prospect and hoping to see some good mineralisation. So this year for Gateway, we're, as I mentioned before, in the middle of a 60,000 metre drill program, finishing up at Julia's, Kashmir and Monarch now, and then we'll shift on to drilling along strike of some of our existing resources. Going to put plenty of those holes in the ground, but we're working towards a resource upgrade in the September quarter of this year, hoping to again add further to that resource, upgrade some of the confidence areas as well, to continue building this project towards something that we can take forward with commercialisation. Bigger picture, longer term for the project as well as this, that 5 kilometre area I was talking about before is that sort of dark grey box around the number 4. That's where we're focused at the moment, and that's where 95% of our energy goes. But longer term, we've got 1,000 square kilometres there. We can see the land package that we have. It's a dominant position on this Gum Creek Greenstone belt, and there's plenty of targets for us to keep working up in the background. Simple grassroots exploration. Never really been, particularly that western side, never really had that type of exploration performed before. So there's a lot of future for us to keep growing this project and hopefully get the drill rig out there soon. So in summary, Gateway's a single project company now. We're completely focused on the Gidgee project. Great geology, existing mineralisation. We've got about 450,000 ounces of resources. We've got the targets to keep building those resources and adding to them. We're going to upgrade in the September quarter. Sorry, it's a great part of WA to be in. Easy to get at, easy to explore, and we've got the cash in the bank and the resources to execute this strategy and the personnel on board to carry it out and take the company forward. We've got the booth just out there around where all the food is on the left-hand side. So come out and see me if you want to ask any further questions, and otherwise, thanks for your time.
Mark Cossom and Gateway, thank you very much, sir. Xanadu Mines is next up on stage. Is an ASX and TSX listed exploration company, and they operate all the way over in Mongolia. Xanadu maintains a portfolio of exploration projects and remains one of the few junior explorers on the ASX or the TSX. Are you going to help me say this one? Who controls a globally significant copper gold deposit in its flagship correct project. Colin Moorhead is the Executive Director and Chairman of and MD and is here to present the Xanadu story. Would you make him welcome, please?
Thanks very much. Well, thanks very much for attending, and thanks to RIU for organising this event. It's great to see so many people here, and I think it was about this time last year that all the Western Australians went home in fear of COVID, so it's great that that hasn't happened. That's a GER, that's our accommodation at the Hamegtai. I visited that site in January 2019. Now, January is the middle of winter in Mongolia, and it was bloody cold. And a little man comes in the middle of the night and puts a bag of coal in your potbelly stove, and it keeps you alive. I went there just before the world went into lockdown, and I believe in this project. What I saw, I spent a week looking at core, and didn't see seas and seas and seas of low-grade mineralisation and alteration. I saw some really high-grade zones, and I thought we can do something with this. There's the normal disclaimers. That's a great picture from a drone. Someone's mentioning drones of the site and what the South Gobi Desert looks like. There's not a lot going on. It's actually a very cool place. That's the camp and the core shed, and the GERs are in the background there where we sleep. What we said we'd do is update the resource, and I'll take you through that in some detail. And what we have there now is 1 billion tonnes containing 8 million ounces of gold and 3 million tonnes of copper. What do you do with that? A scoping study by definition is what you could do. And we've completed that, and there is a detailed document available to have a look at, and I encourage you to do so. A PFS is what you should do, and an FS is what you will do. So we're sitting here with a pretty good idea of what you could do with this. But how does a junior little exploration company fund what's looking like a $500 or $600 million capital project? And that's a tough nut to crack for us all. And we've been in lots of discussions with lots of people, and we're happy to announce a deal with Zijin to help us fund this thing through PFS recently. So that's probably the big piece of news. So the Zijin deal is pretty simple. They've taken a placement in the listed company Xanadu at a premium to market. That's in 2 phases. The second phase requires several approvals, including shareholder approval, and that will happen in the next few months. So Zijin will be sitting in there at roughly 20%, and they will inject $35 million in at the asset level and form a 50-50 JV, which Xanadu will chair, in fact I will chair, to take this project through PFS. I've done a few of these, and I'm really excited based on the scoping study we've done, what we can do here. The really important point about this slide is this is not a control deal. If and when a control deal happens, it'll be next. So we get to a 50-50 position. That gives you an enterprise value that's significantly higher than the current market cap, and it positions us to build this mine. So having money in at the topco allows us to continue to explore. We have another project over at Red Mountain and are working on a third one now. We will form quite a detailed JV agreement to take the project itself through. We have a budget of roughly 20 million, 12 to 18 months of work to do to get this to a really good PFS level. That includes about 30,000 metres of drilling to convert the remaining inferred in the pit volume to indicated or better, and to do the feasibility, permitting, fiscal agreements, all that stuff you need to do to get this thing to a decision to mine. So fully funded through PFS and fully and well positioned to get this thing built. Who's Zijin? Well, a lot of people have told me out at the booth 61, that they remember Zijin as a Chinese gold mining company that bought Norton Goldfields and the Paddington mine, with mixed emotions. Zijin has gone on to be one of the largest copper producers in the world. In fact, they tell me, and I haven't verified this, that they did more copper than Rio last year. So they've done nearly 600,000 tonnes of copper last year, 1.7 million ounces of gold, and nearly 400,000 tonnes of zinc. They're in just about every province in China. They're a vertically integrated company, and they're now in 13 countries around the world and are actively seeking to put their foot on strategic metals around the world. So there's a very good fit with China and Mongolia, and I will talk about that relationship. They also in some big JVs with Barrick up in Porgera and with Ivanhoe over in the DRC. My reading of recent China-Mongolia relationships is that there's been a big geopolitical shift with Russia being on the nose. China is really looking for places to invest, and the two leaders met at the Winter Olympics and put out some joint statements, really aligning Mongolia's new revival policy with the Chinese Belt and Road Initiative. And it was from that point on that the Chinese interests looking at these mines, these opportunities really heated up. So I have no doubt that this is a very good strategic fit for both China and for Zijin. The bottom bullet point there shows Zijin's stated strategy, large projects, responsible green high-tech mining, good upside potential, and M&A to accelerate growth. And if I can say anything about these guys and girls, is that they move fast. So our upgraded resource, and the numbers there show you how it grew, but it doesn't really tell the story. This is my technical area, I suppose. And what I saw there, when I was the chief geologist at Cadia, all the porphyry experts in the world told me that it was just low grade and had to be low strip ratio, shallow open pit stuff, and you'd never find any high grade. And then the great Doc Holliday drilled Ridgeway. There are clear high grade zones in this. Down the road at Oyu at depth, they found the Hugo South deposit, which I think was roughly 300 million tonnes at 1%. And that potential exists here. But let's call it duck a duck. This is a big low-grade open pit porphyry opportunity. And it works. It will work on byproducts credits and scale, as did Cadia back 20 odd years ago. The shape of the grade tonnage curve here, and I don't want to get too technical for the mining engineers, is different from the previous one. There is some very good domaining of the high grade zones, and that does make a real difference to how the pit optimisations work. We did a scoping study and put a lot of detail out, and thanks to our CFO, Spencer Cole, and for working very closely with the ASX to allow us to do that. It is a large, low strip ratio open pit. It's roughly 1:1. It's going to feed initially a 15 million tonne SAG mill with gravity up front, followed by standard flotation. It produces a very clean copper gold con with very little arsenic or anything else in it. After initial payback, we see that mill being duplicated and ramping the thing to 30 million tonne per annum, and producing 30 to 50,000 tonnes of copper and in excess of 100,000 ounces of gold for a very, very long period of time. So this thing works, and it's in serious danger of being built. In-country consultants have helped us with that permitting timeline. We have a very clear process for getting not only the social and legal licence to operate, but also the fiscal agreements in place to make this work. And I think one of the major benefits of this project is that it can get built in that time frame. So we expect this thing to be producing copper in 2027. And that's pretty quick compared to any other opportunities around the world. Why is it quick? Well, there's lots of infrastructure there. I'm used to working in New Guinea and Indonesia and New South Wales, where you really do need to worry about the infrastructure. That picture on the bottom is a train of concentrate rolling past our front gate. The new railway line from Soxeti, I believe is the pronunciation there, across to Seinshand. That's that line there. It runs right past our door, and they did put a siding and a station at Harmagtai. That hooks up with the main north-south railway line, which connects basically China in the south to Russia in the north and everything in between. We've also got good roads, rail, power. There's a water permit there. So a lot of the stuff you spend a lot of time working on is actually there, and it's well set up. In Mongolia, they've said very clearly the South Gobi is for mining, the north is for tourism. So don't mix that up. The north is actually quite a beautiful part of the world, and a lot of national parks up there. The south is for mining, and they are putting a lot of effort into creating that infrastructure. It's a very favourable ESG environment, partially because it's flat, stable, and sparsely populated, very sparsely populated. So in terms of getting through all those social licence to operate barriers, it's actually quite I won't say straightforward. It's not as vexed as some of the projects I've worked on. We have put out a sustainability report, which is uncommon for a junior explorer, but I felt it was necessary to have that. That start. It's really hard to get going on this stuff. You're doing all those things that I think it's worth reporting and getting that in paper and improving on it every year. So that's available too to look at. Lots of upside. This was deliberately framed as a vanilla, low technical risk, low ESG risk project. The weathered material in the top 10, 20, 30 metres, where the recoveries through a float plant aren't great, is waste, and it's in the strip ratio. We are doing leaching test work on that using glycine leach technology, and we see a real opportunity there to turn some of that waste into ore and generate some early cash flows. That's not in there yet. We haven't gone down the technology route. I have run models with in-pit crush and convey to get the mining costs down. That does generate a significantly larger pit. We have done coarse particle flotation test work and that sort of stuff, and we haven't even looked at ore sorting. So all of that stuff that all the big porphyry miners are doing has not yet been applied to here and is an opportunity. And of course, the exploration upside is unparalleled. This thing's open along strike at depth, and is seriously in need of continuous exploration work. I started the Cahill thing, and we explored, and we went on to find Ridgeway and KZR East, and that was a long process. It took a lot of drilling, and we're nowhere near that yet. So this is not a mature field. We are confident, well, not confident, but we're really keen on that sort of Hugo South exploration model. We'll also seek to continue exploring at our Red Mountain project. That's over to the east near Seinshand. If that was sitting in a Lachlan Fold Belt, it would be getting a lot of attention. There's a lot of geochem on it, some great trenching and drill holes there. We see it as a North Parks type setting. It's certainly got evidence of skarns and epithermal mineralisation. So we're really keen to get that one going. And we're also very keen to look at a third project, and are working on that. Andy and the guys are working on that now. So, I can't say this more clearer. Harmagtai is well and truly on the road to getting built. It's got a clear pathway to funding. Xanadu controls it. up until that decision to mine, and then there needs to be a conversation on how that is funded forward. It's going to happen in a quick time, and it's got a very hungry partner that wants to build that yesterday. So, you know, I'm very proud of the team and very proud of where we're at, and I can't say enough about Mongolia as a jurisdiction. I know it's had its issues, but it's certainly an evolving jurisdiction. So thanks very much for your time. Come to booth 61 and talk to the team, and happy to answer any questions at the booth. Thank you.
Colin Warheads, you get thermal underwear, do you, for your Christmas presents and things? You need him there, that's right. I think we got offered a job over there once and I politely declined that one, but it did look beautiful. It did look absolutely beautiful. Luke Reinehr, can you come and join us, please? Gold and lithium explorer Kalamazoo Resources is up next on the stage. They've got major exploration projects in two of the world's richest mineral provinces, the Victorian goldfields and over in the west in the Pilbara. Executive Chairman and CEO Luke Reinehr is here today to tell us about the company's multi-pronged strategy approach that's focused on finding the next major discovery in these Tier 1 sites. Please make him welcome.
Thanks, Chrissy. And good afternoon, everyone. And thanks for the opportunity to give you a bit of an update of Kalamazoo. Before I start, I'll just give you the usual disclaimer. So now, if I can, let me provide you a summary of where we are, and then I'll jump into some more detail. As you may know, Kalamazoo, we have major assets in both the Pilbara and in Victoria. And these are two of the most highly rated provinces, or mineral provinces in the world today, and we're exploring for what we consider the two best minerals, which are gold and lithium. Over in WA, we've completed extensive drill programs at our Ashburton gold project over the last 12 months or so, with future drill programs planned for the next 12 months, as we're looking to push this resource well past 2 million ounces. But most importantly, we've also received some great results just in the last couple of months in regard to some metallurgical test work on our largest resource, and that'll help us progress our development plans. In addition, we've also just started drilling on our Mallina West gold project in the Pilbara, which is just up the road from De Grey's world-class Hemi discovery. And I'm pleased to advise that we're about to start drilling on our lithium projects in joint venture with the major Chilean lithium producer SQM. And in Victoria, our gold exploration is continuing at our Tarnagulla project and across our 100% owned Castlemaine and South Muckleford projects, which are located just 45 kilometres southwest of the world-class Fosterville mine. Environmental risk now is emerging as a leading area of concern for all of us in the resource industry. So we've taken some decisions to be very proactive in this regard. And the key development for us in recent times is that Kalamazoo has become the first gold and lithium explorer operating in Australia that is accredited as carbon neutral under the federal government's Climate Active program. And the rationale for this commitment from us is that we're focused on minimising the environmental impact on our exploration activities in Victoria and in WA. And this also fits in with our new focus on lithium exploration. As these exploration programs progress, we're convinced that minimising the impact of these activities will ensure long-term value for our shareholders and stakeholders. Now, the all-important corporate snapshot. As you can see from this chart and the pie chart on the left-hand side, we've got a very tight share register with the top 5 shareholders controlling more than 50% of the stock. And including in that is the Reinehr family with more than 30%. Kalamazoo's got a current market cap at our share price of about $60 million today. And the share price has been moving up nicely in the last couple of weeks. Though, as any chairman will tell you, I think we're seriously undervalued. In fact, for any smart investor, if they were to invest in Kalamazoo today, they'd be buying at about the same price as Eric Sprott's cornerstone investment of a couple of years ago. We're well funded with more than $4 million cash and shares in treasury, and we have an ongoing stream of options that are regularly providing cash flow for us. And we've got a strong board and management team, and we made a conscious decision about 18 months ago that with COVID and travel constraints, that we'd set up 2 distinct exploration teams to look after both WA and Victoria, and that's been working very well for us. In recent months, we've made some very substantial progress with our 1.65 million ounce Ashburton gold project, which is located about 300 kilometres or so south of Port Hedland. As we all know, the Pilbara is now subject to major gold activity at the moment, with Capricorn and Novo now in production and Calidus about to join them in the next few months. And of course, we've got De Grey's world-class 9 million ounce Hemi or Mallina gold project there as well. And we're now confident that we'll soon join these companies on a development pathway, particularly as we look at options in regards to our large sulfide resource. We consider the Ashburton compares very well with these other projects, particularly in respect to grade, where the Ashburton's 1.65 million ounces is at a very healthy 2.5 grams a tonne. As an overview, the Ashburton project itself has got excellent infrastructure and covers 217 square kilometres with 7 mining and exploration leases, as you can see from this diagram on the bottom. And over the last 12 months or so, we've completed major drill programs totaling more than 20,000 metres. And we're seeing some really encouraging results of medium to high grade gold mineralisation. What we really like about the Ashburton Gold Project, though, is its brownfields and regional exploration potential. Our drill campaigns over the last 18 months has given us confidence that we can substantially increase the resource past 2 million ounces. And our recent metallurgical test work has shown excellent recoveries on the sulfide mineralisation. And so this is now a major focus for us, as we believe there remains considerable sulfide resources still to be discovered there. And if we are successful in that regard, that could significantly increase the scale of the Ashburton project. The Ashburton Gold Project has already produced 350,000 ounces, mainly from the Mount Olympus pit in the period 1998 to 2004, and was then expanded to 1.65 million ounces by Northern Star, who we purchased this project from about 2 years ago. This is the Mount Olympus pit, which still has more than 1 million ounces of contained gold under the pit floor. With our development plans, we've also been focusing on the project's metallurgy, and we've now completed test work programs that have positively impacted on the likely economic recovery of the sulfide mineralisation. And our initial test work has shown that a simple process route for the Mount Olympus sulfide ore can deliver a high-grade gold concentrate of somewhere between 30 to 40 grams a tonne. And this high grade then has outstanding gold recoveries into a rougher concentrate of up to 94%. Now, these are early results, but it certainly has opened up the potential for a 2-stage oxide sulfide plant to be constructed on site, or another option that we're looking at is the construction of a simple crush and float circuit producing a high grade concentrate. And this concentrate could then be sold overseas or potentially to proposed plants in the Pilbara that are treating similar sulfide ore. So we've now started a scoping study, which we'll consider these options in detail, and we're aiming to release that in Q3 this year. I'd now like to mention, if I can, our highly prospective Mellana West Gold Project, which is about 45 kilometres to the southwest of De Grey's world-class Hemi discovery, which, as we know, has now grown to more than 9 million ounces. And as you can see from this map, the project is situated along the same Willia Shear Zone. And what's very positive for us is that our project has never been drilled for gold. So we've now developed 5 initial drill targets at Mellana West based on our extensive soil sampling and field work. And I'm pleased to advise that we've just commenced drilling in the last couple of days on site on this very exciting project, and assays will be announced in due course. I'll just give you a quick update on our Victorian gold projects too, if I can. It's well known that the Bendigo zone itself was one of the richest goldfields in the world, with more than 60 million ounces produced in the 1850s to 1890s at a very impressive average grade of about 15 grams a tonne. And as you can see from this diagram of the Bendigo zone, the north-south major fault lines are the controlling structures. At Castlemaine and South Muckleford, which we own 100% of, there are more than 30 kilometres of major fault structures to test, and they are littered with thousands of workings and shafts from the 18th century. And at our Castlemaine and South Muckleford projects at the bottom of this diagram, they cover about 485 square kilometres. And between them, the Castlemaine and Malden goldfields produce more than 8 million ounces of gold. And then to the right of this diagram, you can see our recently granted Myrtle Creek project just south of Foster, of which we've now started work on. Our exploration strategy in Victoria is focused on finding a large gold resource of 1 million ounce plus at a grade of more than 10 grams a tonne. And we're certainly in the right location in our mine, with the incredibly rich Fosterville mine to the north producing up to 49 grams a tonne. So we're certainly in the right area. However, there is a challenge in discovering high-grade, large resources in structurally complex goldfields. So we're throwing a lot of new technologies at this work, and that has helped us to identify at least 10 high-priority drill targets. And so over the last 18 months or so, we've completed two drill programs at Castlemaine at the Mustang and Lightning prospects. And we've received some very nice intersections there. And we've now extended this trend to about 2.5 kilometres in length. And with our drill programs at the South Muckleford Gold Project, we've just discovered what we consider to be an epizonal high-grade gold antimony system, which we've called Fentimans Reef. So now, if I can, I'll give you a quick update on our lithium activities. If you've been following the Kalamazoo story recently, you'll have seen that last year we entered into a joint venture with the major Chilean lithium producer SQM across two of our Pilbara lithium projects. And the timing's been excellent for us in this regard, with lithium demand and prices booming due to the rapid uptake of electrical vehicles globally, particularly with the US and Europe now targeting 50 to 100% electrical vehicle uptake by 2030 or 2035. And with the recent spot price of spodumene going above $5,000 US a tonne recently, it's no wonder that Elon Musk is saying that if you like minting money, then the lithium business is for you. And the deal we did with SQM was that it would sole fund an initial $12 million into an exploration and development joint venture across our Doms Hill and Marble Bar lithium projects. Bit of background on SQM, they're the second largest lithium producer in the world, providing about 19% of the world's supply, and has extensive construction, exploration and development experience across the world. Its other major JV in Australia is with Wesfarmers on the Mount Holland lithium mine and processing plant. Now, this is a great relationship for Kalamazoo, and we have a common goal of discovering and developing a major lithium deposit in the Pilbara. What's got us very excited is that our projects generally sit within the prospective 4-kilometre wide granite greenstone contact zone. And this area is known as the Goldilocks zone, as highlighted by these magnetics, which is highly prospective for pegmatite-hosted lithium mineralisation. In particular, Doms Hill, which you can see at the top of this diagram, appears to be a geological analogue of the world-class Pilgangoora and Wodgina lithium mines, which are located nearby, as you can see on this map. And even though we're just up the road from two of the world's largest hard rock lithium mines, our projects to date have never been explored or drilled for lithium. And so we've been on the ground field checking and mapping over the recent months and have completed regional scale soil sampling programs that have identified numerous drill targets for us. At Marble Bar, our ongoing fieldwork is delivering excellent results with the identification of multiple pegmatite dikes containing visible lithium mineralisation. And this is further supported by the location of the Nuyella tin and tantalum field just to the north, along with Global Lithium's Archer lithium deposit, which is immediately to the north of us. And at Doms Hill, we have about 25 kilometres of strike extent of the Goldilocks zone. And our soil sampling there has identified numerous drill targets, including a 2.5 kilometre long anomaly, which is likely a quartz core of a pegmatite dike. This is one of our many prime drill targets, which we've identified at both Doms Hill and Marble Bar. And at Pear Creek, which we own 100% of, and it's not part of the SQM JV, we're starting a soil sampling program. And our current plan is once we finish drilling at the West Melina Gold project, where we've just started, we'll then send a drill rig to our lithium projects and commence drilling in June. So I trust I've been able to highlight to you what we consider to be the significant value of our Victorian and Pilbara gold assets and our lithium projects. Yet if you look at our current market cap, in my mind, there's still great value to be had. And perhaps the best way to appreciate that is to look at our current enterprise value per resource ounce, just from our Ashburton gold project. The average EV per mineral resource of our WA peers that have a minimum of 500,000 ounces of resources is about $94 an ounce. However, Kalamazoo is currently valued at just $33 per ounce for our 1.65 million ounces at the Ashburton, or a third of that average valuation. But even at this heavily discounted valuation, there's nil value being attributed to our Melina West Gold project, where we're currently drilling, our lithium projects, our JV with SQM, or our major Victorian assets. But as we all know, it's drill results that get attention. And so in recent weeks, I think some investors have started to see the true value in our projects. And I can only imagine a re-rate if we get some nice lithium or gold drill intersections. So just to sum up, I would say I believe we're well placed to achieve further success on the exploration and development fronts over the next 12 months. At the Ashburton Gold Project, we're planning our phase 3 drill program to substantially increase the existing 1.65 million ounce resource. And we've made some real breakthroughs on the metallurgy, which will now feed into potential development options. We've just commenced drilling along strike from De Grey's world-class Hemi discovery, and from there our drill rigs will go to, or the drill rig will go to our Doms Hill and Marble Bar lithium projects for drilling in JV with SQM. And with the spodumene price of $5,000 US a tonne, calculated to be the equivalent of a US gold price of $7,000 an ounce, it surely is an exciting time to be drilling for lithium. In Victoria, we're searching for next Fosterville, and we continue to be well supported by our key cornerstone shareholders and are well funded. And as an explorer, I think as we all know, it's great to be drilling across all of our projects, which will ensure constant news flow. And as I said, there's nothing like a high-grade drill intersection to get everyone's attention. So thank you everyone for your attention and for your interest. And if you'd like to have any questions, then please come say hello to us. We're at booth 19. Thank you.
You're a very convincing talker, young Luke. I'm sure you've instigated some interesting discussion, and you've got location, and you've done some drilling as well. So you've got a couple of things on your side. Look, they're already stopping him on the way out. Drinks this afternoon. Cyprium Metals. Cyprium Metals is next up on stage. They are an Australian copper developer and explorer with a portfolio of near-term developments focused over in Western Australia with a highly credentialed management team that is experienced in successfully developing sulfide heap leach copper projects in what they like to call challenging locations. And this fellow up here is leading the team. His name, of course, is Terry Burns. He is the Cyprium Study Manager. Please make him welcome.
Thanks, Chrissy. It's really great to be here to share with you what is really quite an exciting near-term copper development story. And for those of you in the auditorium, those of you at home, I intend to focus primarily on that near-term opportunity, which is the Nifty Restart project. If we just do a quick, you can read these at your leisure. A quick Cyprium investment overview. What is Cyprium? Who are we? And what do we do? We've been in existence for 3 years, and we started off with the acquisition of the Q copper project. We then moved to Xanadu Well as an acquisition, and just over a year ago, we finalised the acquisition of the Nifty Copper project, which included the Maroochydore resource and the near IGO JV exploration tenure, which surrounds the Nifty tenements. We're ASX listed. We're a Western Australian focused copper developer and explorer. And really, our portfolio of development opportunities is over 1 million tonnes of contained copper in JORC compliant mineral resources. If you look there, you'll see that obviously Nifty and Maroochydore are very close to each other. And again, that JV with IGO that surrounds Nifty tenure is over $30 million worth of expenditure over 3 years to earn 70%. So we have somebody highly focused and liquid doing exploration in our adjacent to our tenements. We're a great team of people with a lot of SXEW copper experience. Chrissy touched on it. Our experience is in very diverse locations. Our last one was on an island in the Banda Sea in Indonesia. So Nifty, although it's remote, is something that we're really quite happy to be working with. And if you look there, we had at the end of the last quarter $14.1 million worth of cash, and we've paid deposits on all the long lead time items for the Nifty Restart. So that doesn't come out of that. 14 million there, you'll see we're essentially a $100 million market cap company with huge near-term development potential. Nifty went into care and maintenance November 2019 as a producing asset. So everything we're doing at Nifty is restart, readjusting, resetting, amending existing permits. And I just wanted to make that definition quite clear. The Nifty Restart is all about going back into production. The project we're going to be talking about is about 6.3 years, and I'll explain the about as we get a little bit further on in the presentation. But it's really only 10% of the identified mineral resources that Cyprium actually has. And it's just one of those asset purchases that I think has happened at the right time in the right thematic. But hopefully after this presentation, you'll actually have a clearer understanding of what the direction is for Cyprium in the short term. The restart study plates 146,000 tonnes of copper plate as cathodes, LME A grade 5/9 copper. And it comes from two sources, which is a remnant open pit mining proposition of the heap leachable material from a previous incarnation at Nifty and the retreatment of the existing heap leach pads. And I'll go into each of those in a little bit more detail as we progress. The key headline numbers, it has a free cash flow of over $500 million, $544 million. And we've used revenues at a conservative US $9,000 a tonne copper price and a 75% exchange rate. And I'll just give you a little bit of an idea as we progress towards the end of the presentation on some of the sensitivities there and how that might affect the outcome for the project. C1 and C3 costs there are stunning. And if you know what the current copper price is, mid $4 ranges, then there is a huge margin there. Pre-production capital is just under $150 million. Maximum drawdown to first sales is just under $200 million at $193 million. And that when you just, you can use whatever rate you like, but if we use 7% NPV, that's $277 million. And as I said before, that's only 10% of the company's mineral resource inventory. Total mined and stacked, and I'll explain the stacked as we get a little bit further in, is just under 26 million tonnes at 0.65% copper. Won't spend much time here, but if you look to the brown, it's the underlying asset as it stands at Nifty. The blue open cut is the restart open cut design. Keep that picture in your mind because as we go to the next one, you'll see that we've coloured it instead of blue, we've coloured it in the 8 stages of the restart study. And sitting underneath that is a conceptual life of mine open cut. Nifty, for those who are more familiar with the project, started its life as an open cut mine, 93 to 2006. And from 2004 till its care and maintenance in November 2019 was an underground mine. We have produced that life of mine shape because that shape sits around nearly 34 million tonnes of sulphide resource at 1.8% copper. We are not going back underground at Nifty. This is quite shallow as a deposit in global terms, and it will be mined by open cut in the future. In fact, the underground has been permanently sealed and is in fact now our underground water storage as the project progresses through the SX stage. We've started some sulphide metallurgical test work to advance that project. And for those of you who might know some of the members of the team, we actually developed a sulphide heap leach operation in Indonesia. So sulphide heap leaching is something that is in our skill set. So if we take the 6.3 years of the restart study and we look at that life of mine shell, we're looking at an operation that's potentially 20 plus 6.3 years. So it's 2 decades. This is an operation that's been operating for 28 years previous to this. Let's talk at some of the physicals. Whoop. I'm obviously not getting the right pressure here. Yeah, here we go. The oxide open pit physicals. What happened with the existing open cut is that it finished in 2006, and at the time, Aditya Birla were developing an underground operation. That design was never completely mined. And if you look at today's copper prices and the economics around the copper business, the cut-off grades now are much lower than previously. So this is around mining an unfinished open cut, but also the additional material that comes in with a change in cut-off grade. Total waste mined is nearly 53 million tonnes. Total overall strip ratio of 6:1. Reagent consumption test work is underway at the moment. We ran a number of columns, and you can see that in some of our past releases where you'll see our confirmatory columns from past work have run in the lab, and we're looking now to actually try and get that BI, that optimization of reagents. It does not include 1.2 million tonnes at about 0.8% copper inside of that shape because of the drilling density. It's inferred resource. It hasn't been designed. For those of you who follow the company, we've drilled about 20,000 metres of RC in and around the existing open cut, and that's to further define that resource and to infill and turn that into material that we can include in the design. And that is a huge uplift. 9,600 metal tonnes at current value that was going that way to the waste dump, which goes that way to the ore ROM pad if it is of sufficient grade. We're currently working up that mineral resource estimate. I'm sure everybody has heard numerous times so far. Assay results have slowed down what was an ambitious timeline, but we expect to have that update this half year to that nifty open pit resource. What I'm going to talk about now is the other material that's going to be stacked, and we're calling that the retreat project. Currently, there's just over 17 million tonnes of partially leached heap leach material at Nifty at just over half a percent copper in grade. You can see there a photo of what an agglomerate looks like. That's the actual heaps that we collected. We dug a trench and collected nearly 10 tonnes of material, which we've been running trials on in terms of column leaching, agglomeration, and all other test work we're doing. And you can see there that what agglomeration does is just sticks fine particles to coarser particles so that there is fluid able to be percolated through the heaps to dissolve the copper mineralization. That fluid is sulfuric acid. So it can't be like a gold operation where you agglomerate with cement. This is in fact an organic polymer. Cure and leach is important to that recovery. And there's also been a myth that has existed around copper that can't be recovered out of the nifty heaps. Our recent heap leach work and looking at different sizings has showed that the only material that doesn't get leached is the very fine material that's occluded within even the finer particles. What are the key project metrics look like? Pre-production capital I talked about before, nearly 150 million, maximum drawdown nearly 200 million. We've had a data room in place now. The study was finished in March. We've had a data room in place since early in the year. Last week, we had the independent technical engineers on site for the financiers to look at the credibility of the restart study for the financiers, and we're well advanced in the finance process. Operating cash flow there, we talked about NPV. The IRR I didn't highlight, but at 37% is really quite stunning. But really, that's because of the 3-year payback. It's a 3-year payback in a 6.3-year project. And the prices there we've talked about. The things we don't show in the metrics, and we've published essentially the executive summary of the restart study to the ASX, is 164 full-time jobs after construction, royalties of $53 million to all sorts of governments, tax of $188 million paid on that project. Some sensitivities here, you can look at those, and there's more in that release on the study. If you take the copper price up to current levels, it adds about $100 million to the NPV. If you drop the exchange rate to where it is now, it's about another $50 million to NPV. What does that tell us? It tells us that it is copper price and exchange rate driven. Because if you look at the next two, operating costs and capital costs, 10% increase in each of them only drops NPV by 61 and 25 million respectively. Government approvals, I highlighted earlier, this is a restart project. Permits are already in place. They're only being amended. We've had one back already out of those that are listed there, and most of those we expect to be coming through in this half. I talked about the drilling, 20,000 metres of drilling. You can see these cross sections in our previous releases. Those results, which are quite stunning, will be included in the resource update that's going on at the moment. I'll finish off with the timeline. We are a near-term copper producer. We will be producing copper in the second half of calendar year 2023. We will be commissioning late in the first half of calendar year 2023. And you'll see there the boxes we've already ticked, the green ticks. Finance drawdown we're expecting will occur after the middle of this year. And we're optimizing as we speak. You've got a new mineral resource estimate coming up for some extra news. And as I say, the first copper will be on the ground in 2023. Thank you very much.
Thanks, Terry, and thanks, Cyprium. Colin, I got the name of that site that Sean Russo mentioned this morning. Do you remember Sean that did our first speech this morning? He said there was a site that he went to for lots of information. It is www.gorozen, that's GOROZEN.com. That's one that Sean said he goes to for all the information and in-depth bits and pieces and podcasts. All right, final session, or final speaker for this session. And we are going lithium again. Emerging multi-asset exploration company, Global Lithium Resources, taking to the stage. They're set to capitalise on surging demand for lithium by rapidly advancing its Marble Bar and Manor projects, once again in Western Australia. With projects in Tier 1 locations and cornerstone investors secured, this is our Executive Director, Ron Mitchell. Well, not mine, unless I invest in the company, then I will claim you for myself. He's here to discuss the company's extensive 2022 exploration program that aims to unlock this potential for them and for your investments. Please make him welcome.
Thank you, Chrissy, and great pleasure to be here. Thanks to the RIU team for inviting us. Great pleasure to provide an update on, as Chrissy mentioned, the fastest growing multi-asset lithium explorer. I thought before I get started, I just want to give everyone a bit of a scene set in terms of the demand profile for lithium going forward. So I've been in this sector more than 10 years. I've never seen stronger fundamentals as they relate to lithium. And people often ask me, brokers, investors, analysts, well, what is your view on demand for lithium? What is the true picture around demand? What I can say, demand for lithium is no longer a forecast. It's not a projection. These are real numbers. So I've seen the order books for most of the global battery cell producers, the biggest Tier 1 players in Japan, Korea, China, Europe. This is an industry. We're very much at the infancy of this industry. The world needs so much more lithium supply. The world needs 50 more GL1s to be delivered in the next 10 years. So great pleasure to be here at this moment. I mean, that's the reason I've left Big Lithium and moved back to GL1 as an explorer. So just going through, this announcement was released on the ASX this morning, so please have a read at your leisure. So what separates us from our peers? Firstly, as an overview, we've done a lot of work around our maiden inferred resource. We have close to 20 million tonnes at about 1.04% lithium. Importantly, this is at 2 projects. So the first in Marble Bar, one of the preeminent lithium production jurisdictions globally. We have a defined mineral maiden resource there of 10.5 million tonnes at 1%. Remember, this is just the start for us. A very similar geological setting as some of the other presenters have mentioned in relation to the Pilgangoora and Wodgina deposits. And secondly, at Manor, we acquired this project late last year under a really progressive joint venture together with Breaker Resources, fantastic joint venture partner. We have an 80% stake, and this is located about 100 kilometres east of Kalgoorlie. Again, another fantastic location to be producing lithium. There's a number of existing lithium assets under operation in that jurisdiction. And again, we've delivered a maiden inferred mineral resource of close to 10 million tonnes at this deposit. So for us, it's all about drilling this year. We've got a really significant campaign, around 80,000 metres at both locations. Marble Bar, we've commenced that program. Manor soon to commence. So a lot of really positive news flow coming out throughout the course of this year. So just to recap on the market, at a glance, we've got about 200 million shares on the register, market cap of about 450. We've only been listed for less than a year. In fact, we have our 1-year listing party on Friday back in Perth this week. And as you can see from a share price performance there, we've had a fantastic initial period. We were the best performing IPO on the ASX in 2021, and we've continued that momentum through into this year. And it's not really just on the back of sentiment. we're a company that's making moves, and we've undertaken a number of very strategic acquisitions. Obviously, our position at Manor, we've brought some really fantastic partners onto the register in the form of Suzhou TANA, a major lithium hydroxide producer in China, of course, Mineral Resources, and we've got a fantastic management team as well. So pretty tight register. And again, the strategics we have on the register are all about our company being vertically integrated and be able to leverage the strategic expertise from our cornerstone investors in Mineral Resources on the upstream and Suzhou TANA on the downstream. So a bit of an overview of the management. In the interest of time, I'm going to flick through this quite quickly, but a really strong board and management, more than 100 years in mining. I've been in the sector more than 11 years in lithium. Greg Lilliman, man who needs no introduction. Greg was 2IC to Twiggy Forrest at FMG, more than 20 years working for Rio, so a man who really understands the Pilbara. Hayley Lawrence is helping us out with our approvals and our ESG strategy as well. So a really great combination of technical and commercial skills on the board and management. And we're really growing out our geo team as well and our community relations. It's an important part of our business. We're bringing our geos in-house. It's a tight market out there. We understand the risk. We're bringing the guys on board, and actually having the guys in-house working for us, not only are we saving about a 30% premium by not having these functions outsourced, the big benefit for us is these guys are working with our drillers. So as the drill samples are coming out and being logged, they're able to identify visible spodumene, and that allows us to tailor our drilling campaign on the fly. So really, really important. Having these guys with very, very specific experience in the Pilbara, and most importantly with spodumene. I won't talk too much about the market. Suffice to say, I'm really bullish. This is a market, and I know all the global OEMs, and they always say to me when I meet them, Ron, we're really surprised the uptake of our models. I say I'm not. You guys have brand allegiance. You have trust. The likes of Volkswagen, BMW, Mercedes, Daimler, Toyota. Brand allegiance is something that can't be underestimated in this sector. It's one of the reasons when these car makers bring new entries to market in the electric platforms, the adoption is really significant. So in parts of Europe now, we're talking, 1 in 4 new cars sold is electric. In Germany, it's 1 in 3. Norway's 1 in 2. UK's 1 in 5. So we're already ahead of the curve in terms of penetration, and that's the reason we have such a tight market. The market's interesting in the sense that most of the demand is structured in the Northern Hemisphere in terms of global EV production, but 95% of the world's lithium comes from the Southern Hemisphere. And this is a fact that's probably lost by most. Australia accounts for more than 50% of global lithium supply in the form of Western Australia spodumene. About 30% comes from Chile in the form of brine, about 15% from Argentina, and there's small quantities being sourced from North America, Africa, and also China. This slide just touches on the fact that it's more than just an electric vehicle story in terms of lithium demand for the rechargeable battery sector. There are so many wonderful new products in the market now consuming lithium. And one of the markets that I think has tremendous future, and no one really talks about it, is the energy storage sector. This is a sector that is going to grow very strongly in spite of the very unfortunate situation in Eastern Europe at the moment. You're going to see Germany moving very strongly in terms of energy storage. And also the aerospace industry, as we move into a post-COVID world, the likes of Airbus and Boeing are going to be flying more, producing more aircraft. They're under very strict CO2 emissions profiles. So we're going to see more lithium used in aircraft as an alloyed material. Why spodumene and why Western Australia? Well, Western Australia, as I mentioned, provides more than 50% of global lithium molecules to market. Really well branded. We've got brilliant commercial technical expertise in the state when it comes to lithium. And this is really important as part of the next wave of lithium projects to market in terms of reducing the risk, in terms of schedule, but also CapEx. I'll make this statement, and not lightly, Western Australia has the highest level of lithium expertise on a per capita basis anywhere on the planet. And that's really important. Speed to market's important. Spodumene hard rock. There's 5 existing plays in Western Australia. As I said, we have a lot of expertise. We've done it many times over, and we can deliver tons to market very quickly. Post FID, typically 2 to 3 years. And the quality. of lithium chemicals used in the electric vehicle industry made from spodumene concentrate is superior. A little bit on our partnerships, our strategics. We have signed a 10-year strategic offtake with Suzhou TANA, not a common name here in Australia, but certainly in China, a big player. They are associated with the CATL group. And this 10-year offtake is up to 30% of our production. Importantly, market prices from day one. I've been doing offtake in the lithium world for more than 10 years, and to have a deal with market, effectively a spot price from day one is literally unheard of. So it's a really good deal. They're a really great partner, and they provide us access to that downstream lithium expertise. Mineral Resources, again, a company that has an unrivaled track record in terms of delivering hard rock projects. They're involved in 2 fantastic lithium projects in Western Australia at the Mount Marion and also the Wodgina deposits. They have a joint venture with Albemarle. They're on our register at 5%. The reason they're there is, I think, clearly they understand the strategic positioning of our existing projects in relation to theirs in the Pilbara and also Mount Marion. You can see in the diagram on the right-hand side. And also they're supporting us very much on the upstream side of our business. So we talked about vertical integration. On the downstream, we have Suzhou. On the upstream, we have MinRes. So this is a perfect balance for us. ESG is really important. I think we all understand the merits of this. We are engaged with the consultants at the moment, bringing an ESG strategy to market, and we'll be able to report on this in the not too distant future. So let's take a deep dive into Marble Bar firstly. There's a couple of items here I'd like to unpack. Geology, the Archer deposit itself in terms of the resource and the significant upside potential in relation to our drilling campaign, and then lastly, the infrastructure. You know, infrastructure is absolutely crucial, and we have a ripper here in Marble Bar in terms of a sealed road coming through our tenements. So firstly, this is a spodumene-bearing pegmatite at surface, outcropping in multiple areas. I was out at site recently with the board. I was amazed at how much of this was outcropping. So very similar geological setting. Again, it's a granite greenstone interface. We have a maiden resource, again, just the starting position. The maiden resource was defined back in 2020. And this is where the upside's coming from. A 60,000 metre campaign underway. We had our first results released to market on Monday of this week. We released the highest grade results to date. And the infrastructure is very important. We can run if we do move into production, which is our ambition, we can run our tonnes up to Port Hedland and deliver to global markets. So no better project, in my view, in terms of the infrastructure available at our disposal. And it's a tier 1 jurisdiction, as we all know. One for the geos. Again, the chart on the right just shows our tenement package. We were extremely aggressive last year in terms of buying up tenements in and around our existing Archer deposit, which is identified in the middle of that diagram. We've got a 15-kilometre strike with lithium mineralisation throughout that strike. So the focus for us at the moment is drilling to the south and to the east. And just to put it in reference and pinning back to the infrastructure, we're drilling a target at the moment, a significant pegmatite, which is 30 metres off the Marble Bar Road. So yeah, really excited. Lots of really good news flow to come on the back of our assays, which are forthcoming. So this is the first release. We had a batch of 1,400 samples from our program in Q1. Came to date, the highest grade so far. And again, some really nice, fantastic grades coming through, 2.5s, 2.1%. And the intersects now, we're looking to drill these out. We're chasing the palm. We've got the fingers, we're chasing the palm and the forearm in that really significant pegmatite, which we believe is at depth. Some pictures of progress. Again, that's what an outcropping pegmatite looks like on the left-hand side. You can see the drill rig in the background. We're using Orlando as our driller, really experienced, and also profile drilling. Some logging photos there as well. Interest of time, I'll skip through this next couple of photos. Again, we had our board visit only a few weeks ago at site, meeting community. Quickly on Manna. Manna, similarly, this is an outcropping spodumene-bearing pegmatite. Some really significant mineralisation. We've just received our program of works approval. We will be on site, and we have a 20,000 metre campaign scheduled at this asset. So to put it into perspective, our maiden inferred resource here of 9.9 million tonnes at 1.14% was defined on less than 4,000 metres of drilling. We've got a campaign of 20,000 metres ahead of us. So again, the upside is significant. And getting back to the infrastructure, we've got access to the labs, labour, spare parts in Kalgoorlie, only 100 kilometres from Kalgoorlie. The project itself demonstrated some really positive grades. Apologies, a little bit difficult to read, but it is on the AX, so please read at your leisure. But some fantastic grades, and the pegmatite is open at strike and at depth, and it's at surface, open in multiple directions. So speaking to our geos, they can't wait to get on site and start drilling. Operational update, as I said, we have a program of works approval, so we'll be on site in the next few weeks. We have also mobilised a camp. It certainly beats sleeping in a swag. I'm not sure how many of the audience have slept in a swag before, but to do it in multiple weeks can be a challenge. We're looking after our drillers and our geos, keeping them nice and fresh, so they deliver great results for us. And finishing off, so in summary, this is a runway ahead for us. It's all about drilling. It's where our shareholders want to see our value. We're putting holes in the ground at both sites. We'll have diamond drilling through Q3. We'll run our met tests and our assays in due course. And the ambition here is to release a significant resource and upgrade to our resource at the back end of this year and ultimately move into a DFS as soon as we can. Last slide. So what separates us? We've got two projects. Again, tier 1 jurisdiction. Western Australia is a critically important jurisdiction to the future lithium supply. A great starting position in terms of our maiden resource, close to 20 million tonnes. Fantastic, aggressive drilling campaign this year. Access to real world-class infrastructure, fantastic management team and board, closely aligned, very aggressive. So please watch your space. And ultimately, it's going to result in really strong news flow throughout the course of the next 12 to 18 months. So thank you very much. I'll just touch on my last slide is just our values. And importantly, we own it. And I think this is, you know, we recognise this lithium opportunity is a once in 100-year opportunity. And we're in a fantastic position here in Australia. So we've got very big plans, and thanks for your time. Sorry, Chrissy, for going over.
That was worth putting up there. Integrity, as my mother would say. There is no person without integrity. Well done to you. Thank you for rounding out this session, sir. That was very interesting. You've given us more to think about again as well. Was it a Cocos palm? Was it a Bangalate? Using our comparisons here. We've got 25 minutes for afternoon tea. Then we're back in for the last session, and then we have more drinks and fabulous food afterwards, if you have any room left in your tummies. Thank you.